Hello, good evening friends. Today is day 8 of uploading video, continuous 21 days. So let's discuss our today's video. What is the topic of today's video? Actually, today's video is all about a question about our banking sector or the present scenario of banking sector or present condition of banking sector. This question uh, rise some issues and the current scenario conditions, what the people thinks, what people needs, and what is today's generation doing. All about this there is a question mark, or maybe if we this question little bit touch the economy or Indian economy in some aspects, and the thinking of peoples, the psychology of peoples, what they are doing or not. So what is today's question? Today's question is that uh, why are banking sector or Indian banks battling the worst deposit crunch in 20 years? uh, before I want to share about the banking crunch, I like to share, or you should know about the what banks are doing, or what are the main purpose of banks uh, in our economy or anything. As we all know that the main function of bank is taking deposit at some rate and giving loans at some rate, and the mm, loan giving rate are higher than as compared to deposit rate. So there is this gap of a rate of interest or rates uh, give the banks a profit which is countable to run the bank and anything else and much more. So what is happening right now? The first thing is that it is the best time to any bank or Indian banks in terms of profitability or asset quality. There are higher value of deposits as compared to any other times in history. There are peoples are free, educated to deposit their money to the bank, and many more things. But when the people's educated, they have a lot of option, or they know a lot of option about the bank or other than bank. So the second situation is deposit growth too. Yeah, deposit growth is less than credit growth. Means there are many people who takes loan are more, or the uh, or the number of people who are taking loans are have the high growth than the means who deposit their money to the bank. So it is a critical situation, or maybe not critical, but it should be considerable situation that we have to prepare for it, or we have to solve this problem, because any problem start from a small thing, or this is the one of the small thing which may concern the bank, or danger the banking sector of India. As we see in there are many bubbles: stock market bubbles, dot-com bubble, housing bubble in many recent year, and how they affect economy is very in a very fine situation. Not fine, they will give threats to economy, or more than that. So the uh, credit growth is 40% and deposit growth is 11%. It is a huge difference in aspect in a view of banks and other things. And there is not graining enough, means they have not enough money, or money to pay, means the banks have not enough money to give the loans to the uh, needers, who need it. Finance minister and RBI governor concerned about this situation or this condition. So let's discuss about with the example of SBI, in which Uh, in March 2024, the total deposit is 49.16 lakh crore rupees, and in June 2024, the total deposit is 49.01 lakh. It is huge difference, as we see in points, but is a huge difference, a lakh crore rupees in the difference. How people withdrawing their money from the bank, what are happening to the peoples, how market working right now. Same condition of many other banking, BOB and private banks. But as we see that the private banks are good institution as compared to government banks in this aspect. So the report is about the credits and deposits. In the financial year 24, the deposit growth is 13.5% with 204.8 lakh crore rupees. This is the huge amount. But after this, the credit also increased with greater increasing rate of 20.2% with the 164.1 lakh crore rupees. It is not too much difference in the terms of excellent or effective or accurate difference between the deposits and credits of any bank. But in financial 23, deposits are deposit rate is 19.6 and the credit rates are 15.4. So both rates are increasing, but the point is that, and the catch is that the credit rates are more than deposit rate. It is we can tolerate at a limit gap, but it is very intolerable, or I mean to say that it is not considerable that peoples are taking loan in a very uh, it in a very large amount of number, and they are depositing less. It will weak their financial status or credit score and their financial conditions. So let's see what are the reasons of this. As we all know that average rate of deposit mm, taken by a bank is 16.1%, and the loan rate average loan rate is 9.89%. This gap, new generation consider that this is not fair, that you are giving loan at higher price, higher rate, and giving deposit rate of six less. So it is not tolerable by this new generation. They think they can invest in stock market, real estate, and any other things like mutual funds, stock market. And there is a second catch, that tax inefficiency, which is tax deduction deducted before the tax deposit matures. So as we can see that government take tax before they deposit the money, because if you deposit in the bank, you have to pay income or pay taxes. There is inefficiency, that people have less money value as compared to stock market or any real estate or any other things like funds, uh, like financial institute give their uh, uh, something called now I am not remembering exact thing, but bonds. Yeah, I remember that government issue bond, they invest in them, that particular sector, government sector or private sector, by investing in bonds. So the question rises right now is, how can we deal from it? First thing is that we cannot raise deposit rate uh, too much high, because if we increase, then banks increase the deposit rate, then it is not efficient, that how they be profitable, how they earn money, or how they run themselves. And second thing is that we can uh, we can introduce a TDS system or efficient TDS system of tax deduction. And third thing is sentiment. After the after the COVID, people's people's sentiment about the stock market is very positive, so they invest in stock market. And banks are considering that when the stock market fall, they people will invest or deposit their money in banks, so they are waiting for the time when stock market falls. So but it is not a good consideration. So mm, uh, finance minister already told the banks to to set deposit mobilization. SBI already introduced many schemes, like first scheme is Amrit Vrishti scheme. Under this scheme, you have to deposit their our money in 444 days. You will find the fixed deposit rate of 7.25%, and older or senior citizens get 7.75% returns deposit rates. So it is banks are doing their work, or try to try to attract the peoples with higher interest rates. And the main conclusion is that the according to the RBI report, the uh, the main crunch is not it. Many crunches came and gone in the history, so it is not too much thing, but we have to consider it. The banks are survive and revive their in this situation after the 1.5 years. So today's video ends here. Thank you, friends.